Hi, welcome to Business Live. My name is Darryl Kwao. Coming up tonight, rating agency Fitch optimistic Ghana will not default in the repayment of debts, which continues to rise. We will make sense of that assessment. MTN Ghana receives significant shareholder approval to buy back in excess of 1 million shares. We hear from the company's chief executive. Also tonight, we will be in the Ashanti region where the sale of paraphernalia could just be a reflection of the outcome of polls over there. Thanks for being with us tonight. We've got details right after this. Tonight, telecoms giant MTN Ghana has been given the nod by its shareholders to buy back in excess of 1 million shares of applicants who did not provide sufficient personal information to complete their Know Your Customer requirements as required under the company's initial public offer. According to Chief Executive of MTN Ghana, Selom Adadevoh, his outfit will proceed to return a cash of approximately 860,000 cedis to the said shareholders. Bismarck Ausa has more from the virtual extraordinary general meeting organized at the MTN House.
MTN Ghana says the buyback of the shares will be at the IPO price of 75 pesos and comprises the cost of shares at 734,000 cedis and dividend accrued over the period of an amount of 126,000 cedis. Chief Executive of the telecoms operator, Selom Adadevoh, spoke to Joy Business.
We're excited that we've been able to get this across the line. There are several Ghanaians who purchased shares and haven't had the opportunity to participate because of the incomplete KYC. So the objective now is to return the cash to them, including the dividends they've accrued, just to be fair. And hopefully some of them will see the announcement and update their KYC before the process begins. It's about 1 million customers at 75 plus dividends, which is approximately 860,000 Ghana cedis. Yeah, so we'll have the announcement with the buyback. Will be next week. We're working currently with the Security and Exchange Commission to complete the process. But there'll be an announcement in the papers and then we'll continue from there.
Mr. Adadevoh says the company's decision to buy back the shares at 75 pesos with accrued dividend seeks to provide customers value for money.
The original investors, or at least the shareholders who purchased these shares, purchased them at 75 pesos. And buying them back at a lower rate will shortchange the customers. So we thought, in order to be fair to the buyers, we'll buy back at the 75 Ghana pesos plus the accrued dividend over the period. We thought that was what would represent a fair bargain and maintain our level of responsibility as a company.
Meanwhile, the telecoms giant will be celebrating its 25th anniversary in the year 2021. As part of the celebrations, the company has hinted of plans to support the fight against COVID-19 with 150 million cedis.
So next year is our 25th anniversary, and we thought as part of this we should dedicate some funds into a specific fund related to the COVID-19 recovery. So we've committed $25 million, which is approximately 150 million Ghana cedis, and we'll be working with governments to define a set of projects looking at digital inclusion, looking at digital expansion, all in our bid to become a digital economy in the coming years.
The MTN Ghana Extraordinary General Meeting brought together stakeholders, including the board and shareholders of the company. Bismarck Ausa, Joy Business.
Now, rating agency Fitch says African nations like Ghana, which have credit rating of B and stable outlook, will not default in repayment of debts despite rising debt levels. Ghana's debt to gross domestic ratio hit about 71% at the end of September this year, after borrowing about 273 billion cedis. Now, addressing investors on the outlook of sub-Saharan Africa sovereign and debt markets, head of Middle East and Africa sovereign ratings, Jan Frederick, said the COVID-19 pandemic has brought some element of risk to Ghana and other sub-Saharan African nations, but these nations are capable of repaying their debts.
To look at the countries that are currently at CCC, which are Angola, Cabo Verde, the Republic of Congo and Mozambique. And all of these countries now have debt ratios above 100% of GDP. And our definition of triple C essentially means that the risk of a default is a real possibility. Most of the other sub-Saharan African sovereigns are rated at B, which means that there is a material risk of default, but a limited margin of safety remains. So we are certainly not expecting defaults for this region, but we need to emphasize that, of course, the crisis has meant that risk levels are really exceptionally high. And it's also worth emphasizing the role of the international financial institutions in potential routes or paths towards a default. The World Bank and the IMF have recently been particularly clear that they advise all countries where debt levels are already at unsustainable levels to try to restructure that as soon as possible.
Well, let's discuss this further. Joining me via Zoom is Yao Latte, head of the advisory unit of Deloitte Ghana. Thanks for your time tonight. Great to see you. So Fitch is optimistic about our ability to repay our debts on time despite rising debt levels. Do you agree with that assessment? What's your thinking?
Yeah, thank you very much. So from the assessment by Fitch, it's clear that we have reached levels where it raised concerns, and the IMF, the World Bank have raised concerns. Usually when your debt levels reach about 70%, it raises a lot of concerns, particularly to multilateral agencies and the international organizations. So once we cross the 70% mark, 70% debt to GDP ratio, international partners raise those concerns. But that said, I think in Ghana, we have particularly been in a situation where we have the ability to pay our debts. There are a number of factors or certain things that support our debt repayment. And one of them is our commodities. So our commodities have always benefited from downsides in global economies and then also benefited from upward swings in global economies. So as we speak, we know that, let's say, demand for oil has gone down. But the benefit that we're also getting on the other side is that we have very strong demand for gold. And the price of gold has stayed at above $1,900 per ounce over the last 5 months or even more. So it means that we have some commodities that can support our revenue generation. If you recall, when we opted for the HIPIC initiative, our debt levels was above 70%, but our debt to revenue was over 500%. Currently, we don't have that situation. So it means that if we improve our tax collection efforts, domestic tax collection efforts, we'll be able to get out of the woods. It is not a situation where we cannot come out of. The problem we have is that as we get into elections and also try to recover from the pandemic, we are spending on other recurrent expenditure, which are coming at the expense of other things like capital expenditure, which support our long-term growth. But otherwise, I think we are capable of servicing our debt, but the debt service levels will come at the expense of other things like capital expenditure, which should support our long-term growth.
You raised the issue of taxes. We'll come to that in a bit. But I just want to ask you, because yesterday we were reporting that the IMF and the World Bank are going to do an assessment as to whether we are debt distressed. Right now, we are at a risk of debt distress. So in the middle of next year, sometime next year, we're going to have that assessment made. What do you think would be the outcome?
So as at July, I mean, we were around 70% debt to GDP ratio. So we would say that we were showing signs of debt distress. You know that there are other African countries like Zambia that recently reported debt distress levels, which got some of their creditors moving in for their sovereign assets, which is a worrying issue. But we haven't gotten there yet. But from July to date, we do not know how much has been spent and how much has been incurred. So that's the challenge we have, that as at the time, as of July when it was reported, we were more than 70%, but we do not know the situation now.
All right. And so let's go back to the issue of taxes, because there have been suggestions that any government that assumes power may want to introduce more taxes to make up for our rising debt. Now, Deloitte, you've done an assessment of the first quarter budget estimates as presented by the finance minister last month, and you're cautioning against that.
Yes. So I think increasing the tax rates or increasing the tax burden on the existing taxpayers is just overburdening those who are compliant. And I think if you continue to push that, people will become non-compliant. So the way to do it is to continue the effort at bringing people into the tax net. One of the efforts is using digitization. Government has strictly enforced the implementation of the tax identification number system, where you cannot even file a case in court or open a bank account without a TIN or a TIN number, they call it. Those are very good policies, and we expect government to continue or strictly enforce that, and not just have people present the TIN numbers and not follow on with the tax collection, because people do not even file their tax returns. And we expect government to strictly enforce that after you've gotten the tax identification number, you should also be able to present your tax filing certificate and all of that in bidding for government contracts and so on and so forth. When that is done, our tax collection effort will increase. It means that we have the ability to collect a lot of taxes internally, but we are not doing that. And in areas that we are not collecting taxes, such as property taxes, like we've said before, we are not doing well. And so it means there are monies that we can collect, mobilize domestically to support our budget, but we are not mobilizing domestic revenue, and we are always falling on external debt. That's the problem that we've had.
And your concern is that it would derail the recovery of businesses from the effects of the COVID-19 pandemic. And so in terms of business recovery, how successful do you think the Ghana Cares program will be? I know you guys touched a bit on that. Talk to me about that and what direction you think that program should take.
Yes. So in principle, the CARES program was structured as one of the well-structured programs, we must say. So we have the short-term activities which have been undertaken by government, most of the recurrent expenditure, support for business and so on. And we have the long-term aspect, which is long-term funding guarantees for businesses. So government set aside, let's say, 2 billion cedis as guarantee for businesses to borrow from the commercial banks. Right. We think that if government increases this guarantee fund amount and so on and so forth, business will be able to access more and recover. If government increases taxes, businesses are going through the recovery process. So any attempt to increase taxes or impose new taxes that government has removed and classified them as nuisance taxes, they will adversely affect the recovery process. And so from now to the first quarter of next year, we expect the situation to remain as it is, but government should focus on widening the tax net or bringing as many people as it can into the tax net, as opposed to imposing new taxes.
Always great to have your intelligent analysis on our program. Yalate, grateful for your time. He's the head of the Financial Advisory Unit of Deloitte Ghana. Let's turn to other stories tonight on Business Live. Swiss ambassador to Ghana, Philip Stauder, has disclosed that Ghana is the second largest partner of Switzerland. He says investments from his country to Ghana amounts to over $400 million, with over 50 Swiss companies in the country, which have given jobs to thousands of Ghanaians. The ambassador made the disclosure in an interaction with journalists in Wa. Rafiq Salam reports.
The diplomatic relations between Ghana and Switzerland is 60 years. Switzerland, before recognizing the Republic of Ghana upon the latest attainment of independence already in 1938, had established a consulate which was upgraded to Consulate General in 1957. Today, the Ghana Embassy is one out of 11 embassies Switzerland maintains in sub-Saharan Africa. The Swiss Embassy in Accra has additional responsibility for the diplomatic and consulate affairs in Ghana, Benin, and Togo. Interacting with journalists in Wa, Switzerland ambassador to Ghana, Philip Stauder, noted that Ghana is Switzerland's second biggest trade partner in Africa and has over the years heavily invested in the country.
Indeed, 6 years ago, the Swiss Embassy in Northridge in Accra was established. Since then, we are permanently present. We started with development cooperation some 20 years ago, and if my numbers are correct, we invested to Ghana an amount of roughly $400 million over the last years. That's one part, but then I should also mention that we count about 50 to 60 Swiss companies. They come here with investments. They have sometimes big factories, and all in all, they provide thousands of jobs in Ghana. And then we have very good trade relations. So for us, Ghana is the second biggest trade partner in Africa, and you have a trade plus with Switzerland. So in that regard, Ghana hugely benefits from these trade relations.
Ambassador Philip Stolder spoke about the impact the investment is having on the people.
Well, over the last 20 years, of course, we started first with, let's say, classical infrastructure projects, but with the evolution, we changed. And now we support Ghana mostly in the area of the promotion of private sector activities. We have programs in terms of highlighting the value chain in the cashew industry, in the cocoa industry. Then we want to support the institutions.
He also has a bite on the impending general election scheduled for next Monday.
Democracy lives out of the participation of voters, and therefore, I'm very much looking forward also to Monday to see these citizens taking pride and taking joy in executing their voting rights. I think that's very important, and I would like to thank all the people taking care of their voting rights.
Reporting for JoyNews, Rafik Salam.
While still on matters of trade, the Ghana Export Promotion Authority is embarking on an ambitious plan to attract about $25 billion from non-traditional exports by 2029. This would include the processing of crops for export. Alex Dajawa is Director of Projects at the authority. He spoke to my colleague Charles Aite on the marketplace.
The strategy outlines three main pillars on which the strategy rests. The first one has to do with the supply capacity of the products that we have currently. We have recognized that Ghana really does not have the capacity in terms of production to be able to meet the growing demand of the quality Ghanaian products that we have in the international market. So the strategy, outlines various strategies and interventions aimed at boosting our raw material supply. That ties in with government's own agenda of industrializing our economy, as it were. So the products that we have targeted will be given a lot of boost in order to increase their production that will feed the industries that are coming up, particularly under the One District, One Industry project of government.
One District, One Factory. Well, so Alex,
products, we are dealing with mainly products in the horticultural sector, but beyond that also we are looking at transforming the products into industrial products. For example, we are targeting cocoa products, even to the extent of chocolates, because that is where we know we fetch the money. So if we are doing under $1 billion currently of processed cocoa, i.e. mainly in the form of powder and butter, if we finish these products in Ghana by way of, producing chocolate, which some of our factories are already doing. For example, Niche Cocoa is doing marvelously well in production of chocolate. We expect that this will give us a lot more resources in terms of foreign revenue going forward.
Well, speak about non-traditional exports. Ghana is among West African countries producing 80% of the continent's cashew nuts, but processes only 5 to 6% of its cashew output. Industry players point to inadequate local processing factories and unfavorable pricing as factors for low processing output. As the Tree Crop Development Authority begins work, Prince Apia engages farmers and other stakeholders on the way forward.
Dauda Idrisu is a farmer at Dokochna in the Hafu region. He has been cultivating yam for the past 5 years. but he has had to switch to cashew production. We realized cashew was helping the people here, so we became serious with it. It was more profitable than yam, so I switched. The land too was favorable for cashew cultivation than yam. Dauda, however, says poor pricing in the industry is a disincentive to the few cashew farmers. The cashew business didn't help us this year. The Europeans are the buyers, but they didn't come this year. The local buyers bought them at lower prices, so we made losses. Last year, we sold a bag for 700 cedis, but this year was 400 cedis. The situation, compounded by the impact of COVID-19, extends beyond the Dokochna community to other cashew growing communities like Sampa in the Bono region. Here, about 20% of the cashew nuts and fruits go waste because they are left unpicked from the farms. Edmond Ajman is chairman of German North Cashew Farmers Association.
When we are collecting, the collecting is another part. One person can collect 40 to 50 kilos a day. The price is always dwindling. They will buy a kilo today, 5 cedis, tomorrow they will buy it 1 cedi, 50 pesos. And since we are not having no factories here for us to work with them, we have to give them to them like that.
We are here in Kabile, also in the German North District. After drying the nuts, processing is required. But this equipment in this factory can only semi-process the cashew nuts. The unshelled nuts are steamed to soften the shell and then carefully cut open manually. Workers here have had to use their bare hands and local equipment to break out the shells. Nimdie Shreng Cashew Processing Company is one of the local processors whose capacity cannot meet the local demand. Charles Kwame Kuma, CEO.
Capacity is 600 metric tons of the raw nuts, which will yield 150 metric tons of kernel annually. But as it is now, I'm just operating the raw nuts 300 metric tons, which is giving only about 45 metric tons of kernels. And now it has become a big industry that the way we were doing it with manual is no more profitable. In fact, the level of the cashew we have as at now, if all processed in Ghana is able to get $400 million annually as gross income from the cashew industry.
And that's so much money we are losing. Well, finally, tonight, political party paraphernalia are flooding the markets in the Ashanti region with 4 days to the elections. A stronghold of the MPP, the colors of the political party are in high demand. But could this be a reflection of the outcome of the polls in the Ashanti region? Anita Sewa Ajuga filed this report.
It's some few days to the general elections, and we are right here at the Kumasi Central Market, where there's a high demand of NPP paraphernalia. As a result, vendors have switched to selling only NPP paraphernalia. When I asked of the NDC party paraphernalia, I was told there is none. NPP will win the election. That is why I don't feel encouraged to sell other party paraphernalia. The Ashanti region is currently recording a low patronage in NDC paraphernalia. But what has actually caused the low patronage of NDC paraphernalia in the Ashanti region? We find out from a retailer here in the central market. NDC then you can buy it. You can buy it. Today you can buy it 5 days and a month.
NDC Diana, MPP Diana, no moto.
So traders only acts of NPP paraphernalia.
MPP Diana by beside. So no so nso kwa ko fa ba. Minim so mbeto mo feri o say ba na mo mo. Ema last obi be ka so opibi. Yemfa bi ma. Nti kwa na ma no ko fa 5 days and buy. Ko buy mama.
Could this be a reflection of the December 7th polls in the Ashanti region? Reporting for JoyNews, Anita Sewa Ajoga.
Well, we'll definitely find out the results after December 7th. That's it for Business Live tonight. Thanks for watching. My name is Darryl Kwao. We leave you with our quick take tonight.
Over 625 of the beneficiaries have been paid through mobile money after we had gone in to really assess the challenges and to align with the coronavirus alleviation program.